numbers, the financial numbers in Q3 and Q4 had been super duper. We could reach to 2 million ton plus sales in Q4, and similarly in the whole year we could do 7.51 million ton of production and 7.26 million ton of total sales. And this has led us to a different league of steel makers in the country. Your sport and the street sport had been eminent and very pertinent. It is seen by the records that more than 800% is the overall growth in the stock market of JSPL. We started the year with 63 rupees per share, and we reached to 500 rupees per share in 13 months' time. So this is a super growth in terms of street is concerned. So that means the street has a lot of confidence in JSPL. We was in 2012 we were declared as the second largest wealth creator in the world. Today I'm proudly telling you that we are the largest wealth creator or biggest level wealth creator today in the country, in steel sector, and perhaps maybe in the world also. So the data from the world are not yet published. So Mr. Nishant will share with you maybe after 1 week or 2 weeks time. So overall, the things have been doing very well. We have a plan to reach to next year more than 8 million ton production. Last year growth was 19% in production and 20% in sales. Prior to this, we had 6.3 million ton of production, and in 2019 we had 5.5 million ton of production. So whatever we committed to our shareholders, investors, we have delivered. So 5.5, 6.3, and 6.3 to 7.5, and now we are aiming for more than 8 million ton. Without adding any equipment in this 8 million ton, we'll achieve. There will be a small capex to reach to 8 million plus. That is just for the fill in the blanks wherever some modifications are to be done, that we will be doing. The year was full of challenges, the lockdown, and then finally the domestic market was all-time low. But we and our able team in export department and with our contacts in the international market, we could do a sale of more than $1.3 billion from exports. And this revenue from export, $1.3 billion, is about 30% of the total revenue what we have generated. 1,900 crore is the profit what we are on in the Q4. And if you see the overall JSPL standalone, the PAT is 7,154 crores in the complete financial year. And then we had, we have gone to, we have already planned to do the divestment of JPL, and this will bring JSPL as a very vibrant steel company, and we will be in a position to focus more and more on steel. And we want that we should be a true numero uno, means number one steel company in the world, not in India. Number one does not mean that in terms of quantity and tonnage. The number one means in efficiency, in productivity, in ethical behavior, and maintaining the right amount of concern towards CO2 emission, ESG, and the overall business ethics. So this is what our aim is. Our chairman, Mr. Jindal, is a very dynamic and vibrant leader. Under his guidance and able leadership, we all are working with one mission, one objective, one goal, and that is we will be a net debt company in times to come. We had given a slogan to the street and to our vendors and also to our plant people and our team that we will be a 15, 15, 50 numbers company. What is 15, 15, and 15? 15,000 crores of total debt or below, 15,000 crores of EBITDA or above, and 50,000 crores of sales turnover. So with this, if we achieve, which is likely to be achieved in this financial year, and in the private perhaps will be in top 7 in terms of its ratios profitability with different kind of ratios what we calculate. So it's one of the top 7 companies in the country. So these numbers, this ranking may change because other people are also working very hard, and opportunities they do exist in India. India is a happening place, and we believe in the India growth story. And this is the reason we have done the divestment of our Oman plant. And whenever there is a right opportunity we get, we will not be hesitant in divesting any other entity if it comes in our way. But we want to be a very, very vibrant and very efficient steel conglomerate within country. The country is aiming to reach to 300 million ton of steel production. And today there are only 5 families or 5 business houses, those who are very prominently making steel for the nation. So one is JSPL, Jindal Group, JSPL. The other is brother JSW, Jindal Group. And the next is Tata Steel, and fourth is Government of India company, Secretary of India, and now a recent entry of ArcelorMittal. So these are the 5 companies which are commanding a market of about 55 to 60 million ton today, out of 100 million ton what we produce. Balance 45 million ton is being produced by the other people, those who are in a group of 1 million ton plus. And there are not many companies in the country, more than 240 companies in the country. They are induction furnace based organizations, and they produce 200,000 tons to 400,000 tons per year. So the challenge today in front of nation is how to reach to 300 million ton. This is the biggest challenge. And these 5 business houses, they have a great amount of possibility to meet out the expectations of Government of India to reach to 300 million ton by 2030. Our neighbor China, they have 1.5 billion people, and they or 150 crore people as against 135 crores in India. And they are consuming 1,000 million ton steel, and this year they may consume 1.1 billion, that is 1,100 million ton steel, and we are just at a level of about 100 million plus. So there is a big gap in between number 2 and number 1, whereas the gap in population is very minimum. This means the more and more spending from government side will come in the infrastructure, and we are a special infrastructure steel company. Today we are not in general commodities like roofing sheets or automobiles or 2-wheelers or 3-wheelers. We are not in that business. We are in the business of special steel to produce steel for infrastructure projects. So whatever honorable government ministers and our honorable Prime Minister and honorable Finance Minister Mrs. Sitaraman, they are aiming to give a boost to the Indian infrastructure. So we are the solution. We make rails. We have already produced 1080 head hardened rails. We have already produced 1175 head hardened rails for the high haulage to carry 75 ton of weight, and this will be first implemented in South Central and Southeastern Railway. And soon it will be a commodity which will be or a special product which will be utilized and used in India. Today we are the only company in the country who has produced 1080 grade for the metro rails and who has produced 1175 for Indian Railway for heavy hauls. Apart from that, transmission tower is another agenda. Government of India, Power Grid Corporation of India is going to spend thousands crores of rupees to upgrade the power transmission lines from 230 kV to 415 kV and then finally 750 kV. And this upgradation and graduation from 230 kV and above will definitely use more and more steel in terms of angle iron, channel and beams. And this is where we produce the Power Grid Corporation of India's PGCL approved specialty angle irons to absorb that kind of wind load and the high tension wire loads. So this is where we do present. Then another dream project and very prominent project of Honorable Prime Minister, that is shipbuilding and the war shipbuilding. So we are the only company today in the country who are in a big way producing steel, specialty steel for submarines and also for special vessels. So our capabilities are beyond doubt, and Government of India is buying from us, Indian Navy is buying from us, and the private players also are buying from us. We are the only company today in the country having a specialty plates for the cryogenic tankers. Today we are seeing that oxygen is in a great demand, and but we need a special plate for the cryogenic tankers. So we produce cryogenic tanker plates, and which is in big demand now, and I'm sure will be serving to the nation in a much better way. So similarly, the other products we see, whether it is specialty beams, fabricated structure, round billets, special square billets, blooms, we are in a big way, and we are part of Indian infrastructure focus, Indian infrastructure boom. So in nutshell, the times to come are going to witness much more fruits for the company like JSPL. There are not many companies like JSPL in the country, those who have the product kitty as we have. We have 9 different products, and all these 9 products are unique products in itself. So this is what we are aiming. Coming back on the oxygen, as you all know, the country has been passing through a severe pandemic, or wave 1 or wave 2. People are speaking wave 3. God forbid that any wave comes in future. We are combating, and we are fighting a war, like biological war. I don't know who has initiated it, and nobody knows whether it is internal or external, or it is act of God. It can be anything. But the steel industry as a whole has come forward. They are working with shoulder to shoulder with Government of India, and our chairman, Honorable Sri Jindal, he has given the first tweet in the favor of nation, that yes, even the last drop of liquid oxygen available in my plant is available for the nation. He has given a slogan, people first. So though we are sacrificing and we are compromising our total quantity on month-to-month basis for the last 15-20 days time, the total reduction in the capacity will be about 9 to 10%, but that we can make up, we are sure. This does not mean that we will not produce 8 million ton plus in this particular financial year. We will definitely do more than 8 million ton. But today, the navigational approach we are seeing the bad weather, and in this bad weather, we need to have a little longer route to supply the oxygen to our countrymen. And this is what Sri Navinji has told, that come what may, we have to keep the supplies on, and we have to save so many lives. Just for your knowledge, 1 ton of liquid oxygen contains 700 cylinders of mega cylinders, that is big cylinder, D-type cylinders. And 1 cylinder, if it gives 1 life, so 1 ton is giving 1 life, 700 lives. So we supply every day about 100 tons. We have today stock of 320 tons. We are not denying anybody. If somebody comes to us for the oxygen, we are pleased to offer oxygen to them. And but Government of India has already fixed up a nodal agency, and we are working under the nodal agency, under the Ministry of Steel and Ministry of Home, and through the local commissionerate, they allocate us as to where these supplies will be delivered. And this is what we are doing. So in nutshell, we are contributing in nation's growth. We are also combating with the current situation. We have already installed more than 1,200 beds to accommodate the COVID patients in from our plant, or in and around the villages from our plant, in and around the vicinity of our plant. And 400 beds arrangement we have done in Angul, 400 we have done in Raigad, including for this hospital Viram, and then 200 in Patratu and 200 in Barbil. So as a whole, company is working in line with the government requirements, and whenever government will need more from us, will be a front runner, and will be supplying all those gadgets or all those resources, whatever we can share and whatever is possible. So coming back on the steel business, I'm sure is going to stay a similar way, and at least for next 2 years. The reason being is the lot of stimulus packages has been declared by different government in the world, and around $17 trillion are going to be spent by 4 major economies The one is America, of course, and the another is China, and the third is Europe, and fourth is India. So the $17 trillion with four economies, and Europe, of course, is cumulative, I told you. That means at least $7 to $8 trillion will come into steel, and the $7 to $8 trillion coming to steel is a huge sum of money which is to be spent by different governments and different countries in next 2 to 3 years' time. So this means the steel will be a hot commodity. Today, looking at our Indian scenario and looking at the call by our various customers, we JSPL, we have maintained the price difference in between exports and domestic, that is up to $200 or $250 per ton. So we are supplying today to Europe at about $1,050 per ton, to Southeast Asia about $1,000 per ton, to America and to Canada it is $1,300 per ton, and we are selling in India at a price of about $800 per ton. So that potential difference GSP has kept for our long-term customers so that they survive, sustain. We take care of our MSME customers so that they survive and sustain. It is not only minting money in a difficult time, but it is also seeing the social cause and the social responsibility in terms of maintaining good relations with our customers, those who are going to be with us for a long time. And we will maintain about 30 to 35% of the exports as a spot market, and 60 to 65% or maybe 70% will keep on supplying to the domestic market, so that the very purpose of the India growth story is maintained very well. We are sitting in the hub of iron ore zone, that is Odisha and Chhattisgarh. So we are blessed with the companies like OMC, that is a government company, NMDC, and by many other small and big players in the vicinity, those who are supplying us iron ore. So there is no shortage of iron ore for JSPL. We can source whatever quantity of iron ore is available, we can buy. Of course, the prices are different. In last 7 months' time, the total input costs have gone up by 15,000 rupees. That is about $200 a ton, and this $200 a ton has been passed on the customers also internationally and also domestically. But we have not tried to do any profiteering business, and unreasonably we have not tried to make money or to earn money. So the directions from our Honorable Chairman, Mr. Naveen Jindal, is very clear that we have to be very considerate, and we have to see that in thick and thin, our customers are together, we are together with our customers, we support them, they support us, and whenever there is an opportunity in export market to earn more money, so we can play with 30 to 40%, maybe 10% additional, and we can earn profit for the nation, and we can also earn precious foreign exchange for the nation. And this is what we are aiming to. We have very strong reserve people available with us. The total directly, indirectly, 100,000 people are working in JSPL group, and we have strong 30,000 people on our roll. So for their health, safety, everything has been taken care of. Of course, we had 2 deaths due to COVID in one plant and 2 deaths due to COVID in another plant. But we are trying to mitigate this risk by more and more, or by taking the preemptive action. And all these 4 deaths, what has happened, these are mainly because the people, they started their treatment much later than what was required. But we are very much concerned, and we are traveling to our plants regularly to give the confidence to our people. Similarly, our people in finance department, banking, our people in supply chain, our overseas staff, and our people in the head office, they all are, with the grace of God, and they all are safe, and we are taking care of our people, and people are taking care of our company. We believe very strongly, Mr. Naveen ji, he always says that it is not company who makes people, it is people who makes the company, good or bad. So his trust and belief in people is paramount, and we all are committed to make our company a company of our dreams, to make India a company of our dreams. That's all from my side. We'll be discussing on the question answer session. Thank you very much, and Jai Hind.
Thank you, sir. I will now request our CFO, Mr. Hemant Kumar.
Good day, everybody. Myself is Hemant Kumar, CFO of the company. I trust that you, your families, and friends are staying safe and following all necessary precautions against the spread of COVID-19 pandemic in the country. The second wave of COVID-19 has impacted millions of fellow Indian citizens. The intensity of second wave has taken all of us by surprise. However, Indians have faced every situation with strong determination and have come together to help each other. First half of this year was a challenging period with uncertainties and complexities brought on by COVID-19 pandemic. Indian economy and domestic steel demand have been improving since then with accommodative policies, government spending, and relaxation in mobility restrictions. This quarter performance has been a standout in terms of both operational performance, EBITDA, and the cash flow, and helped the company to report one of the highest underlying performance for the full financial year, in spite of pandemic-related disruptions during the first half of the year. There is a distinct improvement in the company's operational and financial performance. The company is showing improved economics, better operations, better stabilization of inputs, enhanced capacity utilization, and sweating of assets. I would like to mention, as our MD sir rightly mentioned, that there is an unprecedented performance even during COVID period 19, and he also touched upon 5 key points. Nation being the first endeavor of JSPL and also the employees' health, and we are also at the same time focusing on highest ever steel production and delivery, and resulting into making our balance sheet very strong by expeditiously deleveraging our balance sheet. And most of the cost optimization initiatives deployed across our steel plants are already visible in our financial performance, yielding desired results. We will continue to strengthen the foundation of our operations with unwavering focus to deliver on financial excellence and generate value for all stakeholders in these uncertain times. Coming to an update on financial performance of the fourth quarter and fiscal year 2021, we are happy to report that the company posted a record standalone steel production of, as our MD rightly mentioned, 2.07 million tons in Q4 FY 2021, compared to 1.93 million tons in Q3 trailing quarter 21, increase of 8%, and 1.54 million tons in Q4 corresponding quarter of 20, increase of 25%. JSPL standalone steel sales also shown a growth from 1 to 1.92 million tons in Q4 of current financial year compared to 1.87 million tons of Q3 21. In Q4 of 20 was 1.4 million tons, showing and registering a growth of 37% YOY. On a yearly basis, I am also pleased to inform that we have seen around 19% growth in our production numbers, as also mentioned by our managing director, 7.5 million tons in FY21 versus 6.3 million tons in FY20, and registering a growth of 20% in sales growth can be observed from 7.28 million tons in FY21 versus 6.06 million tons in FY20. As we follow the strategy of sweating our assets and harvesting investment in Angul steel facilities in the current financial year, we will see substantial volume expansion in our Angul steel facilities in the current financial year. We will see. So the theme or the business direction is absolutely intact. By sweating of assets, continuous deleveraging to continue. Now, by commentary on the consolidated financials, please, we have reported gross total income of 13,213 crores in Q4 21 versus 12,070 crores in Q3 of 21, increase of 9% on quarter-on-quarter, and 7,658 crores in Q4 20, registering a growth of 72% YOY, primarily driven by increase in sales volume and improved sales realization. I am extremely happy to report EBITDA of 5,287 crores in Q4 of current financial year versus 4,252 crores in the trailing quarter of current financial year, increase of 24% on quarter-on-quarter basis, versus 730 crores EBITDA in Q4 of financial year 20, registering a robust growth of 206% YOY. I would like to reiterate that the focused cost saving measures on all fronts, including operational, contractual, and procurement, has resulted in sustained reduction of costs, resulting record EBITDA. In Q4 21, PAT from continued operations stands out at 1,911 crores. On full year basis, gross total income stood at 43,284 crores versus 34,291 crores, again registering a growth of 26%. And EBITDA on a yearly basis was 14,444 crores against 6,815 crores last year, increase of 112%, is showing a robust growth. PAT of 5,527 crores against a negative in the last financial year. On a standalone, I would like to move to a standalone financial. We have reported gross total income of 12,319 crores in Q4 FY21 versus 9,907 crores in Q3, increase of 25% in quarter-to-quarter, 6,767 crores in Q4 20, increase of 83%. EBITDA of 484 crores in Q4 21 versus 3,908 crores in Q21, increase of 25% quarter-on-quarter, and 1,562 crores in Q4 FY20, increase of 213%. And in Q4, EBITDA PAT is 3,426 crores against 2,226 crores of Q3 21, increase of 54% on quarter-on-quarter, as against 282 crores in FY20. On full year basis, the gross total income stood at 37,717 crores against 30,021 crores, increase of 26%. And again, I am pleased to inform that EBITDA recorded was 13,055 crores in the current financial year against the last year of 5,777 crores, reporting a healthy growth of 126%. And similarly, I would like to mention my steel business has earned a PAT of 7,154 crores against 618 crores in the last financial. It is key to note that the PAT has moved 10 or 12 times of the PAT which I made last year. On overseas performance, Mozambique, South Africa are doing good. We have given those numbers in our press release. You may refer those numbers from there. Let me shift my commentary on that side. As we are mentioning that we are clearly focusing on deleveraging JSPL balance sheet by achieving its immediate goal of 15,000 crore net debt, eventual goal to become a net debt free company. The company has been working with a clear focus of sweating its assets, improving capacity utilization, and deleveraging over the last few years. On a net debt basis, at the end of the quarter, we are reporting a net debt figure of 22,146 crores, which reflects so much 33,475 crores debt reduction as compared to last quarter of 25,621 crores. And we are pleased to highlight that in financial year 21, we have been able to reduce our net debt by a figure of 13,772 crores, which is in excess of our guidance that we have been sharing. In addition, we have gone above and beyond on that of strong free cash flows, to make a prepayment of 2,462 crores to our term lenders, which is in line with our long-stated financial strategy of debt reduction and building the most robust balance sheet in the steel sector. Now our debt to equity is below 1, standing at 0.92, and net debt stands as on today's below 20,000 crores. Below 20,000 crores, I would like to repeat. It is very important to note that JSPL Standalone is strongest balance sheet in the Indian steel sector, with a net debt of 10,142 crores and a net debt to EBITDA less than 1. Less than 1, I would like to use that. The remaining debt comes from our underperforming overseas and power business that continue to have a substantial debt burden and drag down not only our return ratios but also credit ratings and ESG score. Hence, I can say with immense confidence, divestment of JPL, I would like to repeat, divestment of JPL will be a game changer for JSPL. We will bring our entire focus to our primary steel business in India, where we continue to have strong operating and financial performance and working tirelessly to become net debt-free company at the earliest. The post the divestment, JSPL will have a much stronger balance sheet, enabling upgrade in credit rating, lower interest costs, and a re-rating of our stock as well. In addition, with an improved ESG score, JSPL will be able to expand its pool of capital, raising via international bonds and reputed equity investors who are keen to partake in company's future growth vision, especially our expansion plan for Angul from 6 million tons per annum to 12 million tons per annum that is presently ongoing and will help expand the growth India steel capacity in excess of 15 million tons per annum. Now let me give you a quick commentary on standalone interest cost. As you may have seen from our results, our interest cost has already come down by 20% on YOY basis, and if we see even on yearly basis, it has come down from 2,611 crores to 2,187 crores. This is largely due to repayment, interest rate reduction, and on consolidated basis as well, the interest cost has come down by 12% on quarter-on-quarter and on trailing quarter by 28%. On full year basis, there is a reduction of 18% as interest has come down from 3,768 crores to 3,093 crores. The reason behind this decrease being reduction in interest rate coupled with reduction in debt. As you all know that JSPL was AA rated company in the past. Debt rating of the company is progressing well, and we are pleased to inform you the company has successfully upgraded its credit rating under A category, A rated family from BBB rated family during financial year 2021. During financial year 2021, credit rating of the company has upgraded from BBB minus to A by ICRA to A minus by CRISIL, A minus by here. I hope with the combination of our efforts, including strong financial performance, continuous and substantial debt reduction, the divestment of our non-core assets, JSPL will again be a AA rated very soon. Update on capex, we have incurred a capex of 160 crores in quarter 4 and 12 months 459 crores, which is mainly sustenance capex. Further, I would like to add that considering present beyond steel industry scenario and strong outlook, company is embarking fresh capital expenditure to expand its presence in the steel market over next 2 to 5 years to strengthen and improve its current operations and also implement expansion projects. More importantly, consummation of JPL divestment is going to result in a cash flow of 3,000 crores for JSPL, with proceeds likely to be used towards paying that or fund expansion plans of our steel capacity in Angul from 6 million tons to 12 million tons, thereby taking us in excess of 15 million tons per annum. While the detailed plan for the said expenditure is yet to be charted out, capex outgo is likely to be in a phased manner. In addition, divestment helps the streamline company's operation by becoming a pure play steel player with all its steel operations within India. One of the fastest growing economies in the world, this divestment is expected to bring more management focus to the steel operations in India in achieving better operational efficiencies and aim for higher profitability. We believe that focus coupled with improved return ratios could act as a stronger trigger for credit rating upgrade and a re-rating of the company. I would like to make my closing remarks with the ongoing super cycle in the steel over the near term, substantial debt reduction owing to divestment of non-core assets, including JPL. JSPL is expected to generate adequate cash flow for meeting all of its debt obligations or repayments, funding the Angul expansion project, and funding requirements of our overseas businesses. Now with enhanced management focus on Indian business, I am confident. I would like to repeat that I am confident we will soon be a net debt-free company in the coming months. So with this headline commentaries, I would like to complete my initial commentary. Over to all of you for your question and answer session. Thank you very much.
Thank you, sir. Thank you, sir. And thank you very much. It is good to have Mr. Kumar also back with us. I would like to tell the audience that he too himself was suffering with COVID, but it's good to have him back here with us. In the same with the commentary, I know we have extended a bit of time, but given that we are all happy about the results, as well as we are appreciative of the time, we would want to actually extend the call by 15 minutes. So, operator, we will extend the call by 15 minutes to take as many questions as we can. With this, I open the floor for questions. Please, as always, a request, please do not ask data questions. We in the IR team are always there to help you with those questions. Let's keep our questions on the more strategic level. Operator, thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. And a request to please limit your question to 2 per participant. If you have a follow-up question, you may rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashish Kejriwal from Centrum Broking. Please go ahead.
Yeah, hi. Good afternoon, everyone. Thanks for the opportunity. So, while our divestment is a welcome step, I have 2 questions on that. One, is it possible that we can offset our CRP and ICDs together at one go, or is there a possibility that we can change the moratorium of ICDs also in line with CRP, so that at least we don't have to go for all discounted cash flows and all that. That's my first question.
Ashish, thank you very much for your question. Hemant this side. We need to understand that both instruments are independent and different. And herein, I would like to invite Mr. Kapil Mantri, our Head of Corporate Strategy and M&A. Kapil, my colleague, if you can come and please take up this question, please.
Thank you, Hemant. Hi, Ashish. Good afternoon. So actually, by comparing RPS to ICD or capital advance, right, we are here comparing apples to oranges. Please understand, both instruments are independent, completely different, and were done at different point of time. First and foremost, we'll have to understand that ICD and capital advance at 9.7% interest was given to JSPL by JPL when JSPL was going through challenging times. In fact, that's repayable on demand by JPL, and now with JSPL performing very well, JPL's debt servicing draws substantial comfort from the interest income that accrues from this ICD. Coming to RPS, right, this is a large amount from JPL's standpoint, given that JPL has been making losses over the last few years. However, I'm happy to share that our team at JSPL has been able to stitch an excellent deal with the buyer in favor of JSPL, where if JSPL misses any 2 coupon payments of the RPS, then JSPL will automatically take over more than 80% voting rights of JPL. Therefore, JSPL is not only going to receive the 3,015 crores upfront cash from the deal at the time of closing, but has also completely protected its interests with respect to timely servicing of RPS coupon payments. So there's no risk or uncertainty from that perspective. In addition, I would also like to clarify that during the sales process, right, we had given all the bidders the option and flexibility to also buy RPS along with equity to ensure maximization from JSPL standpoint. It so happened that all the bids that were received, they all decided to continue the RPS as it is with JSPL. We believe it's credit positive from JSPL's perspective, especially the 3,000 crores cash proceeds. We've had discussion with credit agencies after announcing the transaction. The feedback is positive on the same. And obviously, the next steps will be seeking approval from banks. That should be done in next 2-3 months, hopefully, right? And also, so what I explained to you so far is conceptual thing. Also, just coming to a practical challenge on ground in the listing. Please understand, both JPL and JSPL are governed by different set of loan agreements, right? And neither JPL or JSPL banks would allow payment or offset of a subordinated unsecured ICD. And needless to say, we have to obtain the NOC from the lenders to complete this transaction. Hope it answers. Hemantji, please see if you'd like to add something.
Definitely, Kapil. You really explained well about the rationale and all. I would like to take it from there only. In fact, I'm happy to share that the proposed divestment was well received by our consortium of lenders, who were quite happy given the premium value and all cash offer of 3,100 crores that would further strengthen JSPL balance sheet. In addition, as I mentioned in my commentary also, the divestment of JPL accelerate our vision to deleverage the company quite rapidly and the board's vision to become a net debt-free company in the coming months. More importantly, we have given expansion of Angul from 6 million tons per annum to 12 million tons per annum, as I mentioned in my initial commentary, where we intend to partly fund the capex from rupees 3,015 crores proceeds and strong operating cash flows owing to super cycle, which we are witnessing. You are also maybe seeing in the steel sector that has empowered us to even prepay 2,462 crores, 2462 crore rupees to JSPL lenders recently. I hope to share many such more positive developments on prepayments with you in the upcoming quarters. I hope, Ashish, this answers your query.
Just one small thing in this. So what I understand is that ICDs which are payable by JSPL, what kind of moratorium we have, or it's payable on demand? Just that, can we, align the moratorium period of CRPs with ICDs, which is 15 years?
Kapil, if you can take this.
So right, there was no moratorium. It was payable on demand as we stand today. However, as part of the transaction, this will not be payable on demand. This has a 7-year term. It will be payable in 5th, 6th, 7th year in 3 equal installments.
Yeah, Kapil, that's what I'm asking. When we have the flexibility to change the moratorium, can't we take this moratorium aligning with the CRP, which is 15 years? Why 7 years? Because at one hand we are giving at 5%, and taking it at 9.7%, and that too moratorium also is 7 years, and that's 15 years at least. So at least I understand that ICDs at 9.7 was at a different time frame, but at least in terms of moratorium, is it possible to change it to 15 years, which can be aligned with the CRP moratorium? Or it's completely no?
Ashish, just to clarify 2 things. One, the best way to look at the transaction is just not to mix these 2 instruments, which have completely different objective, as I just explained. That is one. Having said that, with regards to the moratorium, etc., this is the best, result we could achieve from JSPL's perspective. In fact, our board wanted the right, independent directors asked us to ensure that JSPL gets the prepayment right if it wants, right? 9.7% isn't, from the way we think, isn't cheap from JSPL's perspective, right? And so this, not even actually makes commercial sense. I explain you all the legal and practical challenges of doing it, but it is what you're suggesting doesn't even make commercial sense for JSPL to do.
Thank you. May I request Mr. Kejriwal to please rejoin the queue? We have participants waiting for their turn.
Okay, thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity and congratulations for a very good set of operational results. Sir, I have two questions. One is again on the structuring. First is, sir, how should you explain or how should one understand the rationale of the transaction right now? We had a pretty good coal block allocation, 6 million tons per annum. Probably it would have taken 6-9 months to ramp up. The profitability for the asset could have been better. It could have fetched better valuations. So first question amongst related to JPL is one is on timing. Secondly, we have given that it is on back of ESG. I'm a big fan of ESG, but then the simultaneous question which comes to my mind is, why is it that the company not divesting its overseas coal assets, which haven't moved anywhere, nor does it take from a ESG point? And that's the second thing. Third is, we have spoken about growth, which is great, but then why are we going ahead with blast furnace first and then DRI? I'm not sure whether DRI is gas or coal based. That's the third question. And when we are talking about growth, why are we not talking about reducing the carbon intensity, which is the highest?
Ritesh, if I can come in, let's limit ourselves. There's a long queue. We could limit ourselves to 2 questions.
Yeah, there's 3 questions, Nishant, over here. So I think one is on timing, second is on ESG, and third is on capital allocation. I think all 3 are pertinent. I have more on capital structure. I'll get back in the queue. Thanks.
Okay, thank you.
Okay. I think you asked in the beginning the rationale of divestment and all. I would like to say the rationale behind the deal is straightforward and in line with the board's vision to pursue debt reduction via multiple initiatives, including divestment of non-core businesses, especially underperforming ones that are a drag on JSPL balance sheet, performance and growth plans in steel. By saying this, again I request our Kapil Mantri to walk through the larger purpose and the benefits and strategic initiatives taken for divesting JPL for its futuristic growth of JSPL and rationale behind it. I request Kapil to take it from here.
Thank you, Amanji. Hi, Ritesh. So I think you asked a couple of questions. Let me try to address all of them. One, with regards to ESG, that's the first point. I think that's fundamental for JSPL. We've decided, to be our environmentally conscious company, and obviously we now understand the future is about being clean and green, right? So that's the key motivation, growth driver for the company going forward. JPL divestment was also part of that. Obviously apart from debt reduction. And you mentioned about the international coal assets, etc. We are open. We've various point in time we've had discussions with different people, and at suitable time for the right value, we may look at divesting those. So we've been open to that, definitely. Obviously, there will be some ESG angle which will remain because of the nature of business we are in, steel making. But wherever possible, we are making attempts to reduce that. So that is one. Second, on the rationale, I think the rationale is threefold, which is ESG being carbon neutral, reducing carbon footprint. That is number one, clearly. Number two, which is reduction of debt. That's been our stated position. We have been consistently working on it. Number three is focusing on steel in India, and so those are the 3 biggest rationales for us to work on it. Does this answers, or if you have something else also?
I have follow-up questions if Nishant permits.
Just to add to this, just to add to this on the ESG point, you'd be, and it is for all of us, you'll be glad to know that now we actually have a board monitored committee which is looking at sustainability and the goals and the targets for the entire group. So that's an addition that we have now. and so that's where we are actually heading.
Nishant, can I ask a question to Sharma ji and one for Kapil, please, if you may allow?
Yeah, Ritesh, if I could ask you to get back in the queue.
Sure.
Really
Thanks.
Thank you.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good afternoon and thanks for the chance. So first question, continuing on the JPL divestment topic, just want to know what is the comfort level that JPL will be quite positive and we would earn the dividends on the RPS, and also what Kapil mentioned initially, the 2 coupon miss gets us voting rights. Does that also a PAT loss also count as a coupon miss? Yeah, that's my first question.
Yeah, definitely. If there is a PAT negative, there would be a coupon miss.
Okay, and the earlier one, I mean, given that JPL has been loss making since the time Tamna 2 was commissioned, given the situation of the sector, so what confidence we have that we will basically accrue these dividends in the near future? Just some thoughts on that.
Kapil, if you can take this.
Yeah, Hemant. I'll take the second part first. Right, even if JPL misses dividend coupon because of not making profit, even in that case, the voting rights kick in. So we are, as JSPL, completely secured from that perspective. Obviously, we all know JPL has been going through a tough time, and it's difficult to, in power markets, it's difficult to estimate when will a company become profitable, so especially in JPL's nature. We've been last 7-8 years, we've been hopeful. And, on general plans, year on year, we've been estimating higher PLF. We've been, projecting signing up of some PPAs also. So it's slightly uncertain territory we are in. So it may be difficult to actually comment on future performance. But if for some reason it doesn't happen, then we are completely protected.
Okay, and a follow-up, I mean, given the deal is involving... Hello, this is my second question.
Yeah.
Yeah, so the follow-up, I mean, given the deal is dealing with promoter entity, I mean, what comfort we have with the equity contribution capability, and will that lead to, further pledging of shares of JSPL?
Kapil, shall I take it?
Yeah, please go ahead.
As far as JSPL is concerned, I can't talk about on behalf of the acquirer, and we don't have any insights in their sources of funds. I think they are bid considering the availability of funds. However, from JSPL perspective, we are very clear that there would be promoters at least are very clear there would be no loan against shares or JSPL share pledges. In fact, the intent is very clear to bring down pledge down to zero in coming quarters, definitely in next 12 months' time.
So just to conclude with one suggestion, I mean, largely echoing investor feedback, I mean, the transaction is a great step, but it's a complex one given the multiple securities involved, rather than a straightaway debt and equity transfer. So if it's possible, it would be, I mean, really well appreciated by all community if one can simplify the transaction, or at least what initially Ashish was alluding to, match the tenure and the inflow-outflow of funds of all the outstanding securities, the RPS and the ICD, because given the 20-year outstanding tenure, it's quite discomforting to have outstanding transactions with related parties. So that's an only suggestion. Thank you and all the best, sir.
Okay, that's your suggestion. Kapil? Okay, next. You can take next call.
The next question is from the line of Gaurav Rateria from Morgan Stanley. Please go ahead.
Hey, thank you for taking my question. So, 3 key points I had. Firstly, will JSPL need to give any corporate guarantee for the loans of JPL with respect to this divestment transaction? Secondly, how do you plan to mitigate the risk of rising price of iron ore, my understanding is that the Sarda mine inventory would be largely over in the current quarter, and from next quarter you will have to keep buying from outside. And thirdly, when you said that you want to become net debt free, this is after taking into account the growth capex. After that, you're saying you will become net debt free, or there will be some more debt which will be there in the balance sheet because of the new growth capex? Thank you.
Okay. I will take first question of copper guarantee. I'm happy because now is going into a new acquirer or buyer. There is no question of now providing a copper guarantee from JSPL per se as such, and we are in the process of taking NOCs from the concerned lenders. And second, iron ore question, I request MD sir to take that question. I will come to a third one straight away, net debt free. Net debt free, we are talking about as everyone is witnessing a super cycle, as you may be also. Our endeavor would remain to use internal accruals to fund our capex going forward, but our overall mantra given by our MD is 15-15-15. That will continue till financial year 2023. Now to our MD on iron ore, please. Sharma ji.
Yeah, can you hear me? Yes, sir. I'm audible. Can you hear me, Hemant?
Yes, sir. Yes, sir.
Okay, so iron ore, if I understand correctly, the gentleman
Sorry to interrupt. Mr. Sharma, we cannot hear you. Your voice is breaking, sir.
What about now?
This is better. Please go ahead.
Okay, so the iron ore availability in Odisha is in abundant, as I told you. Whether it is SMPL functioning or not functioning, SMPL giving to us or not giving to us, that does not matter. Yes, we had stock in SMPL, which Honorable Court has allowed us to pick up, and that we have picked up from last year, February to till now. And that has also brought a good amount of revenue. And 6 years we had been working without any SMPL material. And we have, as I told you, we have long-term arrangement with the Odisha Mining Corporation, and we have some another MOUs with some of the private miners in the state, and we are also regularly buying from NMDC. So, and in times to come, as declared by Government of India, the Steel Authority of India has to sell about 25% of their iron ore produce, what they do from many areas, and so is the Tata Steel. So I think this will be a regulation that 25% iron ore has to be sold to the people, those who do not have iron ore mines. So there should not be any shortage of iron ore in the country. We have more than 30 billion ton of iron ore in the country, and many of the resources are yet to be explored. So the consumption of iron ore in India is very low, and we will not face any problem as far as the raw material security is concerned. Hello? Hello?
Operator?
Thank you. The next question is from the line of Vishal Chandak from DAM Capital. Please go ahead.
Yeah, thank you very much for the opportunity, sir. Everyone is talking about a steel super cycle, but we all know for a fact that the moment China tightens the money flow, the cycle will dry down within a matter of a couple of months. So the first question is that if the steel prices were to correct sharply from the current levels, would we still continue with our capex plans? And what is the EBITDA level at which we are comfortable given our capex plans? Second, there has been a lot of discussions about government imposing either an export duty or reducing the import duties to ensure that the steel prices are trending downwards. Now, if the government has, as a matter of policy, intervenes in rising steel prices when they have done practically nothing when it came to the bottoming out of the steel prices, then as steel makers, do we still continue to expand, or we look at protecting our balance sheet for the downturn? So what's your view on that?
Yes, I will take your last question first. First of all, we should appreciate that India is a free economy. Number two, we are today we are free to import steel in India, and the duties are negligible from 2.5% to 5%. In a product of $800 or $1,000, 2% is negligible. There's $16. So even if the duties are scrapped and they are made zero, still the Indian steel is much cheaper, at least by 20% cheaper than the imported steel. So import if today we want to have in the country, it will be about $1,000 or $1,100 per ton, whereas we are selling steel at a price about $800 a ton or $750 a ton. So there is no point in importing the steel in the country, even if the duties are brought to zero. The other point is the government spending in infrastructure that has to go in a different way. The price variation clause in the projects are to be incorporated, and the overall inflation, where does Government of India want to reach? That has to be seen. India is not insulated economy. India, whenever there is a problem in the world, so the problem or opportunities, they do exist in India also. So we are part of the free world, and today we are not dumping steel anywhere to maintain the prices. So it is not that. The fourth point you have asked, China. China is, they have their own consumptions. They are going to spend $5 trillion or $6 trillion in their own infrastructure, and they do not stop any plant unless they start a new plant. So they were, for the last 20 years, if you see their record, so their record is superb. So they have been growing at the rate of 10% plus in steel, and sometimes 12-15%, and they are going to maintain it. Their exports are hardly 80 million to 100 million ton in a year, and this year this will be too less. And out of 1,100 million ton, so 80 million ton is only 7-8%. So similarly, India also has put together around 10 million ton of exports, and India used to import about 10 million ton steel. So this was getting us neutralized. So with the FTA signed by Government of India with many countries like Korea and Japan and other Southeast Asian countries, the opportunity and the facility is still available for the Indian importers to import steel from Japan or from Korea, but they are unable to do so because the domestic steel is available at a cheaper price. The next point you have asked, whether if China slows down, whether the expansions will take place or not. The expansions basically is a country's requirement. It is not the specific requirement of any company. But we are a business house. We need to make profit. We want to be in business. So if the opportunity is available, then definitely we want to grow. Now the point here is, our aim is to grow without borrowing money from the market or from the lenders. So when we have decided that we do not want to get into trap of debt as we were in 2016 and 17 and part of 2018. So we have learned a big lesson that no expansion is to be done by borrowing money. So our chairman, Mr. Naveen Jindal, he has very clearly given a slogan to us: earn and invest, E&I. You earn profit and invest, flow back the profit for expansions, modification, modernization, research and development, or whatever. We are not, our appetite is not to become number one. We are not hungry behind the capacities. We will go very judiciously, and we will not cross our means to expand. So if we can expand 2 million ton a year, we'll do 2 million ton. If we can expand 5 million ton, we'll make 5 million ton. If we can expand only 1 million ton per year, we'll expand 1 million ton per year. If tomorrow we feel that the expansion is not at all suitable, we will not expand. We are a flexible organization. So this is what our purpose is, and I'm sure under the leadership of Mr. Naveen Jindal, we will be in a position to sail through in a much better way. And our overall exposure in the market is limiting, and we have reduced our debts from 46,900 crores to this level today, which is 19,300 crores. And if we take the other divestments on the annual, that will be only 12,000 crores. So this is a very healthy balance sheet. So 15,50 is about to be touched very soon, maybe within this financial year. And rest assured, we are not in a race to burden ourselves. We are not following somebody who has put a label behind his car, "Don't follow me, I'm going to hell." So we are not going to go to hell. We will keep our company safe, secured, and very robust. Thank you.
Sure, sir. Just one more question. We have mentioned that ESG debt and focusing on steel has been our key priorities. Now we have hived off assets like Oman and JPL, which have been servicing their debt through themselves. But while we have retained assets like Australian coal, which is still not even started output. So any thoughts on, would it been more prudent if we would have divested the Australian business to the promoters before divesting the Oman or the JPL, which were still generating EBITDA and were servicing their debt?
Yeah, you
have held the ESG targets as well.
Yeah, you're right. Yeah, I agree with you. Your point is very well taken. You see, what is sold in the market, wherever there is a demand, that is sold in the market. And from where the demand comes, when the trade-off is favorable, then only the demand comes. Today, because of political issues in between China and Australia, China is not buying any coking coal from Australia, and the Australian mines are bleeding because their prices are somewhere about $100 a ton, which is just very near to their cost. The cost of mining in the country is about average, I'm telling, average is about $65. By the time it reaches to port or they do the washing in case they need to and they do the blending, the cost goes to about $75 to $80. They are selling today FOB somewhere about $110 or $105, maybe sometimes $120, which used to be once upon a time $310 and $315. So the amount of profitability was superb at that time. We entered in this particular business when the cycle was really a very paying cycle. When we bought these mines, the cycle was about $200 plus. So today the cycle is only $100 or $110. So we have to see the geopolitical environment. So with the joining of Australia with America in a war against Pacific Ocean invaders, so-called. So the China has reduced business with Australia, and they have reduced. The first thing they have reduced is the coal, coking coal. So I'm answering one. The moment the market improves, or the moment China starts buying coal from Australia, the coking coal prices will shoot up, and these may shoot up to about $170, $180. And the diplomatic discussions are going on in between China and Australia. Hopefully, this will be done shortly, and then it will be the right time to find out the right investor or right buyer to divest these mines. We believe in the India growth story. And we are also not interested in having these mines, though we need coking coal. But we will divest 30% or 40% or 50%, and we'll keep about 5 to 6 million tons or 7 million tons coal coming to India from the Australian assets. So we are not a distressed seller today. If we become a distressed seller, then we don't get value for money. If we wait a little, then the trade-off can be better. Hope I answered you.
Thank you. The next question is from the line of Prashant Kota from Dolat Capital. Please go ahead.
So thanks for the opportunity. Sir, we have been a big fan of JSPL and the way they do the business, and have been tracking and covering the company for more than a decade now. Sir, and we have always been thinking that the Oman asset, the power asset are all integral to the company. And some of the investors also who invested last year, couple of years ago, have been thinking that. So now all of a sudden, management is saying that these are non-core assets and divesting away. And it is not that these are dead and not generating any EBITDA. We are reducing debt, but at the same time, we are also losing a lot of EBITDA. So net debt EBITDA loss versus a net debt going away is not, that remunerating on the face of it. So now coming to future, in future, will what are other assets that the management thinks is non-core? For example, do we think that pellet plant is also non-core, or anything else on the card, just so that we are all well prepared, sir?
So I think our investment manager, divestment manager, and the chief, Mr. Kapil Mantri, will reply your question.
Yes, sir. So, the important thing to understand, and obviously, for example, JPL has been one of our premium assets, right? We are proud of what we built. Now, core, non-core, asset value, all that are valid and true at one point of time, and it changes, right? So we are an agile company, we are forward-looking company. So JPL was a phenomenal asset, but we've been wanting to revive this. We are struggling for last 9 years after reallocation. JPL is performing all our efforts at more or less similar plant load sector, more or less similar EBITDA generation. We've seen cycles, elections, this, that, and we are positive and optimistic. And we've been running the transaction for Jindal Power Limited. We've done 2 full-fledged transactions in past. Once we could sign an agreement with JSW, didn't go there. Other time we did have a term sheet from a foreign investor, but couldn't make it work, or the value doesn't work. So this has been some time. Fortunately, at this time we could consummate this transaction, and similarly, Oman was a focus area because it's that point of time, but now we want to be focused on India, and that's the main fundamental point, right? JPL, even if one considers its core, right, it's almost 33% of the debt. It only gives 10% of the EBITDA for JSPL, right? So we do not consider it significant enough. We do not, and that's something we are very clear about, we do not consider coal as future for anybody, and especially for JSPL. And that's why we don't think JPL has any value in the scheme of things, the way future is unfolding. The situations are unfolding to be with JSPL.
And Prashant, if I could just add before taking the next question, that you would appreciate that as a company we've been very nimble. We've been nimble with the changing times. We've been nimble to actually better our return ratios after each divestment that we've done. And so that nimbleness will continue. And as and when we take steps towards any other further divestment, we'll definitely keep the markets posted.
I also would like to add, Nishant, here, as everyone on the call may be aware, there are too many stranded thermal power assets even available in NCLT that remain unresolved. You can take an example of KSK Mahanadi, Meenakshi, Simhapuri, for instance, some of which have full PPAs that are long term, and yet there are no takers for these assets. This is the reality on the ground. I just wanted to mention this. That's all.
Thank you, sir. Operator, we'll take the last question.
And I would just one moment, sir. I would like to add a couple of more points on the previous question. Kapil Mantri here. These are 2 parts. One, and I'll tell you a specific example. 3-4 years ago, we were for almost 1.5 years in discussion with a Japanese strategic partner for doing some arrangement, getting some equity stake, or then getting into a joint venture in JSPL. The single most important reason that the deal didn't go through, right, was presence of Jindal Power Limited with JSPL and the thermal and coal exposure. That's the single important reason. Otherwise, they love the asset, they love JSPL, everything else was fine. We engaged with them 1.5 years. So that is one, I think again on strategic perspective I'm talking about. The second, with regards to steel focus in India, we believe that India, if at all the future of steel in the world, it's India. For two primary reasons. One, the kind of growth we are expecting in the country in general, and two, the cost advantage which India has because of the cost of iron ore and availability of iron ore. That advantage of cheaper iron ore does not exist in Oman, for example, right? And it will never exist because it imports all the raw material and exports most of the finished goods. So that's that situation. I mean, India is phenomenally well placed compared to Oman, and I told you about the Jindal Power Limited. Thank you.
Operator, if you can take the last question, please.
Thank you. Ladies and gentlemen, this will be the last question, which is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. The question is more on the Angul acquisition, or Angul capex rather, on the future capex of 6 million ton, which has been announced. First of all, how to look at this, capital cost of $400 per ton? It seems a bit on the lower side. So when we sort of break it down into components, we see that the downstream has largely been unannounced, barring the hot strip mill. So, any thoughts on sort of augmenting it with future downstream or rolling capacities? And, also to sort of at least think some thoughts which might have gone into creating, standalone EAF, which is fed by scrap, given so much focus on ESG. So some clarity on these few issues would be great. Thank you.
Yeah, thank you so much. Very relevant question. First of all, expansions, what we are planning or what we are declared, that will be for the intermediate products and not the finished products. For example, the hot rolled coils, it is a finished product for many, but otherwise it's the intermediate product when the cold rollers, they buy it. So we are not going for the cold rolling or tube making, pipe making, color coating, galvanizing at the moment. So we are going to produce hot rolled coils, which is a very hot commodity as of now, and this is going to sustain and remain in times to come also. Because of multiple activities happening in the country, the hot rolled coil consumptions, as per the projection, the market will grow on YOY basis about 10%. So when the market is YOY basis 10%, then there'll be huge vacuum, and the people, those who are in this business, they will definitely be in a position to sell their goods faster. The next point here is the overall cost of per ton of steel making, and how it sets to at a lower number what we have declared. And you see, this is like a brownfield expansion. And neither the railway lines are to be laid, nor the water pipelines to be laid, nor the roads are to be made, nor the other infrastructure which is required, like electrical substation, power. So these are to be installed. So this is a bare minimum requirement for the plant and equipment. And we have our own fabrication division. We fabricate the structure, and then we have our own civil engineering team. So civil also done in-house. And finally, we have to just bring the critical components. For example, if we put a blast furnace, then the total import in the blast furnace is hardly about 180 crores. Balance everything has to be produced within India. And we, fortunately, we have in India our own capital goods building facility that is in Raipur, where we make the machinery for the steel plants, and we'll be utilizing our capital good industry. And this is also being promoted by Government of India now, that the capital goods must be made within the country, and this is what we have aimed for. and we'll be manufacturing our own plant based on some of the basic engineering and based on some of the proprietary items what are likely to be imported. So this is the reason that the overall price, overall cost, what we are telling, it is quite low. Had it not been there, then definitely, then the international barometers or the Indian barometers or the yardstick what people maintain, that would have been maintained accordingly. So today we have the opportunity to grow at a lowest cost, and we can grow in a fastest pace. So this is the reason we have taken these numbers, and mostly the equipments are repetition of the previous equipments. For example, blast furnace will be repeat blast furnace of the existing blast furnace. So we have the engineering available. We know from where what is to be sourced. We know what we can produce in India and what we can produce in-house in JSPL. Similarly, the DRI plant we can make here because we built our previous DRI plant also here. Then to build the previous DRI plant, we had to build a coal gasification unit also. And but this time, we are going to use at least 60 to 70% of our coke oven gas to produce DRI. We have already tried out, and we are now using 50% coke oven gas and 50% syngas in our existing DRI plant. So this is the reason we do not need any coal gasification. So that means we do not need any washery, and we do not need so much of big coal gas refining system, which will definitely reduce the cost. Your next point for the electric arc furnace, it is very valid point. Yes, you are right. We already have India's largest electric arc furnace today working in Angul. We have 3 more furnaces working in Raigad, where we want to increase the capacities from 100 ton to 130 tons, and that is also under progress. And our aim is to produce at least 50% of steel through electric arc furnace route. And this is the reason we want to put up a pellet plant, followed by a DRI plant, and followed by another electric arc furnace. So the another area where we can use our DRI, that is in converter shops. So converter shop worldwide, people don't use HBI or DRI. We are the first company in the world who has commercially used the DRI in the world. We are using today 12 to 15% of DRI in DOS shop, that is converter shop, which is unheard by many in the world. This is the reason, because we do not need any additional coal or coke or electricity. Just we need a hot metal and a little oxygen to bring the temperature to that level of 1600 degree and add DRI into it. So DRI is produced through a very environmental friendly route, and to melt DRI and to convert into steel through the converter is much more beneficial in terms of reduction in CO2 than even the electric arc furnace. So these are the areas where we are working. There are so many research and development going on in the company, which I cannot share everything in this form, but if anybody is interested in talking one-to-one, we can definitely share. And when you visit our plant in Angul, you will be happy to witness all those things what we are talking today. Hope I answered your questions.
Thank you, sir.
Yeah, thanks.
Sir, I know despite the fact that we've extended time, I know there is a long queue, and I think there is one pertinent question that's coming forth to me is regarding the spread after the third quarter, after the last quarter, and so where we are right now and quarter-on-quarter change in spread, and what are we looking at? Is if you could take that in your final commentary.
Yes, Nishant, may I? Can I continue?
Sir, please.
Yeah. So, ladies and gentlemen, and my company, first of all, I thank you for the patient hearing. Today is Eid holiday, so I also wish you, on behalf of our company and on behalf of our Honorable Chairman, wish you a very Eid Mubarak, happy Eid. Eid is a festival in the country where the more than 25 crore people, they celebrate, and we all celebrate with them like everybody celebrates Diwali and Holi.
So it is a symbolic message which gives harmony, and we also pray to God Almighty to eliminate this coronavirus from our country, so that the country remains healthy and can meet out the expectations of the people. Now, coming back on the spread from Q4 versus Q1, and then in this particular year, you see, we all are professionals, and we enjoy making steel, and we enjoy to be in the business of steel. Anybody, whether he or she, when you reach to a particular point, then there is no U-turn in life. So we believe in this theory that there is no U-turn. And no U-turn means whatever we produced in quarter 4, we have to produce better than quarter 4 in quarter 1. The prices, they will vary. Sometimes we get better margins, better EBITDA, sometimes lower margin, lower EBITDA. But the sustainable EBITDA and sustainable margins are always our focus. And if you get something additional, that is a bonus, and one should always enjoy that bonus during a rally time. So the point here is we cannot take a U-turn. And number 2, we cannot think for any kind of threat which can hamper or jeopardize our business. So we have all the tier 1, tier 2, tier 3 planning. What happens if the pandemic spreads further? What happens if the domestic demand becomes lean? What happens if the domestic industry is struggling for the survival? All these things we have charted out our plan, and those are very, very meticulous plan. This is what we shown to the industry and to the country last year, and during pandemic time we have shown such kind of results, splendid results, where our investors, our management, our people working in the organization, and the stakeholders, they are very happy, they are glad, and they have given us a reward to by way of the stock prices reaching to 500 rupees. Believe in the management, believe in Mr. Jindal, Mr. Naveen Jindal and his family. They have 200 years of experience in steel, the 4 brothers, and all of their relatives, they are in the steel business. And I'm sure the country is in safe hands. Company is also in safe hands. So we also believe that Prime Minister Mr. Narendra Modi, he is the best manager to manage the disasters in the world. So I think this disaster today, what country is passing through, none other than Mr. Modi can handle in a better way what he can do. We have to support Mr. Modi, we have to support our government, and we have to support the steel fraternity, and let us wish that this particular year will bring more cheers on our face, and we all will be doing much better. So trust in Naveen Jindal, trust in our management, trust in our company, and trust in the nation. Then only we can build a country of our dreams. So I hope, thank you very much once again, and namaskar.
Thank you, sir. So I'd like to thank from JSPL team IISL for organizing this call, and all of you for attending the call. As always, we continue performing, and Eid Mubarak today. Thank you. Okay. Operator?
Thank you.
Over to you.
On behalf of IISL Securities Limited, that concludes this conference. Thank you for joining us.
Thank you.
You may now disconnect your line.